morning and welcome to a fresh new day of trade. We're on a Thursday now, and of course, just one more day to go after this. But let's have a look at what global markets are doing through Wednesday and what have they done, and what do the cues indicate with regard to Indian markets. And I'll leave Ankita to do that for us.
Good morning to you, Harsh. Good morning, everyone. Now, US markets slid again yesterday. Now, as fresh batch of corporate earnings keep coming in, and also Wall Street continues to weigh the outlook for the future Federal Reserve policy moves, Dow Jones fell 207 points yesterday, and the S&P 500 slid 1%. The Nasdaq Composite dropped 1.7% in trade yesterday. Now, investors will be watching out for the weekly unemployment claims also stated for release as of today. Now, that's an important number to watch out for, given that the past numbers have shown a strong and a resilient labor market in the US. So that's something that all the investors and everyone will be watching out for today. Now, the European markets were higher. FTSE hit a fresh intraday record high shortly after the markets opened in Europe, rising by 0.8%, and then it pared gains to end the day just 0.3% higher. Now, European Stock 600 index also trimmed its earlier gains to provisionally finish the session up 0.3%, and DAX was up more than 0.5% in trade. The Turkey Stock Exchange had suspended trading after a 3-day of major sell-off. So that's the roundup, that's the global handover that's coming in from the US and the European markets. Ash, take us through what is the crude looking like?
Well, yes, you're looking at WTI, Ankita, which is around that $78.50 a barrel mark, and that's largely, stabilizing at those levels, if I can call it, as the rate hike concerns start to fade a little bit. The Federal Reserve Chair did speak about rate hikes, and a little bit on the hawkish side, but he also spoke equally balanced about the fact that he'll continue to review data as it comes. So, you've got a dichotomy there playing out, and you of course have therefore oil prices stabilizing. But when I'm looking at Wednesday full day, oil prices definitely gain. So third straight day in a row of gains for oil, that's a positive. And that also means that most market analysts are baking in that there will be a good sense of growth coming through in calendar year 23. We saw the IMF also hike the global GDP forecasts. So a couple of positives coming through there as well. We're looking at Brent, which is at $85 a barrel as well. That has also gained, but flat in early trade today.
All right, Harsh. Now let's quickly take you through all the events that you need to watch out for today. Now, as I mentioned, weekly the jobless claims are due today for US. The crude oil inventory number is also going to come out. Now, we also have the weekly options expiry as of today. Today is Thursday. And also we have a couple of earnings coming out. We have Hindalco, we have Page Industries, in Hindustan Aeronautics, Lupin, HSBC, Zomato, LIC, Adani, Total Gas are all due for their Q3 earnings as of today. We also have PM Modi's virtual address, and the Ola CEO will be unveiling some of the new products in today's trading session.
Well, thanks so much for that. We'll have our eyes glued on all of those events as well, Ankita. But quickly moving on, two major statements coming from the US, one from Jerome Powell and the other from the president himself, Joe Biden. The Fed chair says that the US economy is in early stages of a disinflation. So he sees disinflation in the goods sector already, but not in services as of now. Powell also warns that rates could go higher if economic data throws any surprises. On the other hand, President Biden says that inflation has been a global problem, not sticking to the US, and largely because of the pandemic. He acknowledges that more needs to be done, but adds that inflation is finally coming off. Interestingly, Biden also says his country would need oil for years to come, while also pressing for a billionaire tax. What do these two big ticket items signal to global markets in 2023? Listen in to top experts.
We have to understand, when he's speaking there, he's addressing to his base. His base is bottom 50. What is usually the base of socialistic parties? Their base is the bottom 50% who don't pay any By the way, bottom 50% doesn't pay any income tax in US. And they're always friends with that very select top 1% where they need to finance their socialistic policies from. He's addressing his base. They don't get it. That's why he said this ridiculous thing. That's why he keeps coming on channels and saying inflation is zero when it is month on month zero. I think those kind of things, you to read this in context. His base loves it. He gets the applause in the Congress, and people I'm sure who he's trying to address, they don't get any of this. US will need oil for at least next 50 years, forget next 10 years, right? But that's the politics here, what to do.
Indeed it does, but inflation is coming down, and I expect inflation to come down even more. Perhaps by year end, we could see inflation somewhere around maybe 4.5%. Next week, we have inflation data, and I expect the CPI to show another drop. There's no question that inflation is coming down. And from a wage inflation viewpoint, you have to realize that we had a very strong labor market report last week, but again, wages were up modestly, another indication that wage inflation has peaked. Of course, there's a risk in inflation, and that risk is energy. And so, with China and India, big buyers in the marketplace, the fact of the matter is that inflation is likely to remain, that is, oil prices, are likely to remain within a range of about $70 to $80.
And well, moving on from US to Asia, India and China are two of the most populated countries, and for years, the two countries have grown at a pace much faster than the developed countries. But where do these two countries see the next phase of growth? Well, it is on self-reliance, or Atmanirbharta as we call it. Just recently, Chinese President Xi Jinping said his country's growth and modernization was different from the West's idea of modernization. So here's an explainer on what Xi Jinping said in a landmark speech ahead of his third term and what it could mean for China. Let's take a look.
India and China, two of the most populated countries, and for years the two countries have grown at a pace much faster than developed countries have. But where do these two countries now see their next phase of growth? Well, it is on self-reliance. We've heard so much about Atmanirbharta, as we call it over here. Just recently now, the Chinese president, Xi Jinping, has said that his country's growth and modernization are different from that of the West's idea of modernization. So today we're going to look at explaining what Xi Jinping means in that landmark speech he's made ahead of his third term, and we'll try and decode what it could mean for China. Now, Xi Jinping has addressed the top cadres of the Communist Party during a speech he made on Tuesday. If there was one line that he sought to make very, very clear, it was that China's idea of modernization is very different from that of the West. What he said roughly translates to, and I'm going to quote, the myth that modernization means westernization, that myth has been debunked. China showed a new model of modernization, different from the West. It's a brand new form of civilization. And Xi Jinping went on to say that he wanted other developing countries to explore other parts of modernization inspired by China. That speech comes at a time when China-US relations have been at their worst in decades. The US Secretary of State, Antony Blinken, has recently postponed his first visit to China after months of preparations on both sides. So Xi Jinping has taken pride in the way that his country has developed over the years, while claiming that it has provided this long-term stability to society in doing so. Xi Jinping's speech was delivered a month before China's annual parliamentary meetings, where a power shuffle is going to take place. Xi Jinping, as you may already know, has secured an unprecedented third term in China, where he's expected to consolidate his power as the visionary that he's positioned himself in. And of course, that speech made that point about his vision about Atmanirbhar China quite clear.
Well, moving from China and India to Turkey, that's in focus at the moment. The president of Turkey acknowledged shortcomings in his country's response to the world's deadliest earthquake in more than a decade, as hope dwindled that more survivors would emerge from the rubble of thousands of toppled buildings. With the confirmed death toll approaching 12,000, Turkish President Erdogan visited the especially hard-hit Hatay province, where more than 3,300 people died and entire neighborhoods were destroyed. Residents there have criticized the government's efforts, saying rescuers were slow to arrive. Meanwhile, rescue teams in Turkey and Syria search for signs of life under the rubble. Teams from more than 24 countries have joined tens of thousands of local emergency personnel in the effort. But the scale of destruction from the quake and its powerful aftershocks was so immense and spread over such a wide area that many people were still awaiting help.
And Federal Reserve Governor Christopher Waller talked tough on inflation, warning that the fight is not over and could result in higher interest rates than markets are anticipating. Speaking at a conference, Waller said that the January jobs report indicated that the employment market is robust and could fuel consumer spending that would maintain upward pressure on inflation. Consequently, he said that the Fed needs to maintain its current plan of action, which has seen 8 interest rate hikes since March 2022. Waller said that he sees inflation still too high, while he expects just moderate economic growth this year. He said that he did note that wage data is moving in the right direction, but not enough for the Fed to lower rates.
Well, and the chief executive of JP Morgan cautioned against declaring victory against inflation too early, warning the Federal Reserve that the Federal Reserve could still continue to raise interest rates above the 5% mark if higher prices ended up sticky. Diamond's warning came after the Fed officials said that more rate hike rises are on the cards, although none were ready to suggest that January's hot jobs report could push them back to a more aggressive monetary policy stance. In an interaction with a publication, Diamond said people should take a deep breath on this one before they declare victory, because a month's number may not look so good.
And Alphabet lost $100 billion in market value after its new chatbot shared inaccurate information in a promotional video. And a company event failed to dazzle, feeding worries that the Google parent is losing ground to rival Microsoft Corp. Alphabet shares slid as much as 9% during regular trading, with volumes nearly 3 times the 50-day moving average. They paid losses after hours and were roughly flat. The stock had lost 40% of its value last year, but rallied 15% since the beginning of this year, excluding Wednesday's losses.
Well, and on to jobs. Disney is set to cut 7,000 jobs, or 3% of its global workforce, as part of a multi-billion-dollar cost-cutting initiative aimed at streamlining the company's operations in a period of media industry turmoil. The move marks the most significant action Bob Iger has taken since returning to the company as CEO in November. Disney announced the changes minutes after it posted its most recent quarterly earnings. The announcement also comes as Disney engages in a proxy fight with activist investor Nelson Peltz and his firm, Trian Management.
And video streaming giant Netflix finally announced their guidelines on password sharing, starting first with the users in Canada, New Zealand, Portugal and Spain as of yet. Now remember, Netflix has estimated around 100 million users around the world using a shared account.
Well, and Chinese food delivery firm Meituan plans to hire 10,000 workers in its first quarter of the year. Meituan is hiring across a number of different areas of the business, including technology development and customer services across dozens of cities. It said that it is hiring as the consumption recovery trend in China starts to accelerate. Remember, Meituan is hiring amidst global layoffs. We did speak about Disney there.
Well, I don't know how well the Netflix news is going to sit well with the users. I'm not very happy about the not password sharing rule. But
up to the start of the market today, we'll quickly take you through what we have lined up for you later today. We have J.D. Patil, who's the member of Executive Committee and advisor to the CEO and MD of L&T. He largely leads defense and smart technologies. Then we have Rahul Chadha for, of course, his views on where the markets are at the moment. Then we have Ms. Sandhya, who's the Chief Financial Officer at Narayana Health, on the back of the earnings. We have Bharat Madan Den, who's the President and Group CFO of Escorts Kubota, also on earnings. And whether the tide for new age tech is really turning, and for that we have the founding partner of 108 Capital, who's going to be coming in, Nimesh Kampani. Very interesting conversation there. And we have Neha Singh as well from Traxen Technologies with regard to their earnings. We have Liberatha Kalat, who's the Managing Director and Chairman of Dreamfolk Services, on the back of their earnings. And lastly, we have Pankaj Mittal, who's the CEO of SAMIL, who's also going to be joining with regard to their earnings. Largely a power pack lineup for you. Earnings as well as new age tech. New age tech is currently the order of the day. Solid returns from the likes of Paytm after a solid set of numbers.
And well, that's a power pack lineup for you for On the Market. At Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our values, we present the second edition of Nivesh Ke Fund Day. On this edition, we discuss India's economic growth and how that can benefit you. Let's take a look at what it has to say.
Hello and welcome to yet another edition of Nivesh Ke Fund Day. I'm Ajay Sharma. Now it's a well-known fact that India's economy is on a very strong growth trajectory.
Yes, Ajaya. In fact, India is considered the fastest growing emerging economy across the world.
But Kavita, how can the everyday Indian be a part of this growth story? And what are some of the avenues that they can explore?
Now, one of the relatively easier and simpler ways to do this is to invest through mutual funds.
Absolutely, mutual funds provide the investor an avenue to invest in multiple asset classes.
Yes, Ajaya. Through mutual funds, an investor can get access to equity of shares of the Indian stock market as well as global stock market.
Not just equity, they can invest in bonds and debt market and even invest in gold and silver through the mutual fund route.
Right. One more thing, Ajaya. By investing through mutual funds, a person can invest in small denomination and does not have to make large investments at one go.
Yes, this helps the investor continue their investment at regular intervals for a long duration of time. Additionally, when a person needs money, they can redeem the mutual funds unit worth the amount they require easily.
Absolutely. One does not have to sell the entire investment. Thus, one gets the benefits of liquidity and flexibility also.
So if you believe in India's growth story, make sure you're a part of it. And the easy way to do that is by investing in mutual funds.
And with that, that's all on this edition of Nivesh Ke Fund Day. Thank you for watching.
Watching Market Cafe. Now, at Times Network, we are always looking to create investor awareness and make financial matters simpler for our viewers. Keeping up with our values, we present the second season of Nivesh Ke Fund Day, and on this edition, we discuss saving and investing, which are both important concepts for building a sound financial foundation. Let's take a look.
Hello and welcome to another edition of Nivesh Ke Fund Day. Today we will talk about something that is at the foundation of a person's personal finance journey.
That's right. We're going to look at the savings and investments and the different roles they play in a person's financial portfolio.
Let's start with savings. It's when we keep aside money for an emergency that we can have easy access to. So basically, savings has high liquidity.
Investing on one hand is using money to get some assets that we hope will grow in future, thus helping us grow our wealth.
Well, under the heading of investing, there are a number of different assets that a person can explore, which provide varying levels of returns along with different levels of risk involved as well.
Yes, so investors can pick and choose the investment options that are in line with their risk and reward appetite, and most importantly, their time horizons. So if someone wishes to invest for a short to medium-term duration, they can invest in debt mutual funds, and someone who's looking to invest for a longer time horizon in a higher risk product with relatively higher returns expectation, they can invest in equity mutual funds.
And there are many options that would be suitable to persons' varying requirements, and the best part is that people can now invest as low as ₹100 per month through different mutual funds.
Another point in managing your personal finances is that a person should be disciplined. Being disciplined with savings and investments is important. And through mutual funds, this discipline is made easy as a person just has to opt for a SIP or a systematic investment plan.
Absolutely, and with the SIP, an amount that is decided by the investor is invested at a time fixed by the investor in a mutual fund picked by the investor himself. So in this way, the investor gets full freedom to choose their investment journey as well.
That's all on this edition of Nivesh Ke Fund. Hope we've been able to explain the difference between savings and investments for you. Stay tuned for more such investment insights only on ET Now.
Well, yes, that was Nivesh Ke Fund. Always insightful to hear some of those thoughts. But let's quickly move on. Adani Group has been in focus over the last month. They've had, in fact, a very eventful month, if I can call it. And they've recovered quite sharply from the fall. They're up about 50 to 70% from their 52-week lows. But how will this affect domestic mutual funds holdings in the group? And who are these mutual funds that have an exposure to the group? Somit breaks it down for us. Somit, good morning.
Well, after going through the mutual fund fact sheet that they come out every month, what we have understand is that in the 9 Adani Group companies, nearly 20 mutual funds have invested, and as of December, the market value of these holdings stood at close to 23,000 crore rupees. So, what are the top 5 Adani Group companies in which mutual funds are invested the most? Firstly, it's Adani Ports, where the investment stands to around 7,200 crore rupees. In Ambuja, which was recently acquired by the Adani Group, the investment of mutual funds stand at close to 6,300 crore rupees. In Adani Enterprises, it's close to 4,900. In ACC, it's close to 3,400 crore rupees, and in Adani Total Gas, it is close to 500 crore rupees. Now, mutual funds that have deployed the most of their funds in actual terms in Adani Group companies, firstly, it's SBI Mutual Fund, which has deployed close to 5,800 crore rupees. Kotak Mutual Fund has deployed close to 2,300 crore rupees. ICICI Prudential Mutual Fund has deployed close to 2,250 crore rupees, while Nippon India has deployed close to 1,882 crore rupees. And lastly, UTI Mutual Fund has also deployed close to 1,800 crore rupees in the 9 Adani Group companies. Now, but if you see mutual funds deployment as a percentage of total equity AUM, Quant tops the list with around 8% exposure. Then there is Tata Mutual Fund, which has an exposure of close to 2.9%. Motilal Oswal Mutual Fund has an exposure of close to 2.8%. Nippon India Mutual Fund has an exposure of 1.3%, while SBI Mutual Fund has an exposure of 1.2%. And lastly, only three mutual funds have exposure to all the 9 Adani Group companies, and that's SBI Mutual Fund, Nippon India, and ICICI Prudential Mutual Fund.
And I'll ask Somit to stay back because MSCI will conduct its quarterly rejig today, and that will be effective from March going forward. Somit is going to tell us all the stocks that may be included and the inflows that are expected. Over to you, Somit.
Well, the MSCI quarterly index review is expected to happen today post-market, so most probably we'll come to know about the announcements tomorrow early morning, and the effective changes of these changes in the MSCI index would be effective from March 1st. Now, according to Nuvama and MK, on the probable inclusion side, there are two stocks that come out. There's Bank of Baroda and CG Power. Now, both the brokerages are expecting an inflow of close to 137 to 150 million US dollars in Bank of Baroda, which is nearly 2.2 to 3 times its average daily volume, that is a 20-day average daily volume. For CG Power, Nuvama is expecting an inflow of close to 150 million US dollars, which is nearly 14 times its average daily volume. On the exclusion side, both the brokerages have assumed Biocon to be excluded from the MSCI India index, and the outflows could be to the tune of close to 46 to 66 million US dollars, which is nearly 5.4 to 13 times its average daily volume. And in case of Indus Towers, the brokerages are expecting an outflow of close to 43 million US dollars, which is nearly 9.2 times its average daily volume. However, apart from this, one important announcement that MSCI will be doing tomorrow is the fact that they could reduce the weightage of Adani Group stocks in the index. Now, MSCI has come out with this clarification where they're saying that certain investor holdings in Adani Group companies will not be considered as free float, and this free float will be reviewed and implemented today along with the quarterly index review. Now, this announcement is expected to come on today with the quarterly index review, and the Adani Group companies that would remain in focus are Adani Total Gas, Adani Enterprises, Adani Transmission, Adani Green, Adani Ports, Ambuja, Adani Power and ACC. Now, according to Nuvama, these companies have a total weightage of close to 5.7% and have a holding value of close to 3.5 billion US dollars in the index, and these stocks would be important to track because if any reduction in weightage could lead to outflows in these Adani Group companies.
Well, thanks so much for that lowdown with regard to MSCI as well as the correlation with Adani Group. Let's quickly toss it straight to break because we're slipping into a very short break. That's and of course more on the domestic front. On the other side, we'll go stock specific. So stay tuned.
Welcome back. You're watching Market Cafe, and it's that time of the show where we get you all the stock specific action. And well, you know the drill. We have the lovely ladies Vamakshi and Ashesha in the studio with us. But first up, we'll go to Ashesha. Ashesha, tell us what are the stocks that we need to keep on our radar for today's trading session?
Good morning. So Piramal Enterprises will be the first one in focus in today's trading session. Remember, it reported its numbers yesterday post market hours, and consolidated revenues have seen an uptick of nearly 42% on a year-on-year basis. As far as margins are concerned, they've come in at 30.7% this quarter versus margins of 87% that the company had reported in the previous quarter. Moving on to Antony Waste then, that one will also be in focus, and that is because subsidiary company has been awarded a contract for collection, transportation, processing and disposal of waste in Mumbai, and the consideration stands at about 1,024 crores, and this is for a period of about 10 years. Moving on to Oberoi Realty then, that one will also be in focus on the back of its results, where revenue for the quarter gone by stood at 1,629 crores, an uptick of a whopping 96% on a year-on-year basis. Profit meanwhile has come in at 703 crores, up 50% on a year-on-year basis. Moving on to Techno Electric then, where the company has disposed of about 37.5 megawatt of wind power assets out of the total 111 megawatt assets that it has. This has been done for a total consideration of about 158 odd crores. Piramal Pharma also reported its numbers yesterday, where revenues stood at about 1,716 crores, up 11% on a year-on-year basis. Margins meanwhile have contracted. They've come in at 10% this quarter versus 25% margins that the company had reported same time last year. Lastly, Narayana Health will also be in focus yet again on the back of its numbers, where revenues have grown by about 17.5% on a year-on-year basis, and net profit has seen an uptick of 58% on a YOY basis.
Well, thanks so much for all those details, Ashesha, but I'll throw it straight back to you because Hindalco is all set to declare its Q3 numbers. What are we expecting? Muted quarter is what I understand.
Absolutely. We are expecting muted set of numbers from Hindalco this time around, and that is because aluminium prices were on the lower side on a quarter-on-quarter basis, which is expected to impact realizations this quarter. As far as numbers are concerned, standalone revenue is expected to see a marginal uptick of about 1% on a quarter-on-quarter basis, while margins are expected to expand a tad bit. We are expecting margins to come in at 7.9% this quarter versus margins of 7.5% that the company had reported in the previous quarter, indicating an expansion of nearly 40 basis points on a quarter-on-quarter basis. As far as segment-wise performance is concerned, copper segment is expected to report an EBITDA per ton uptick of nearly 3% on a quarter-on-quarter basis, while aluminium EBITDA per ton is expected to decline by nearly 13 to 15% on a quarter-on-quarter basis, and that is because of lower aluminium prices that were prevailing in the quarter gone by, which will be partially offset by the lower coal prices that were prevailing during the quarter. Remember, Novelis, which is Hindalco's wholly owned subsidiary, reported its numbers a couple of days ago, and it reported a fairly weak set of numbers. And from Hindalco as well, we are expecting muted set of numbers this time.
So that was a lowdown on what to expect from Hindalco. Now I'll quickly move to Vamakshi. Vamakshi, tell us what are the brokerages saying this morning?
Well, absolutely. Let's first start off with Trent. Now we have a note that has come in from DAM Capital. Now what they're seeing is a strong like-to-like growth supported by high inventory turns. Inventory turns on CAG stand at nearly 3.5 times, and this is an improvement past the pre-COVID levels. On the back of those positive factors, DAM Capital has actually gone ahead and upgraded its rating on Trent from neutral to buy. They've given a target price of 1,661 per share. We will also be watching out for Escorts Kubota after the company reported its Q3 numbers yesterday. We have a note that has come in from JP Morgan, and they believe that it was another quarter of earnings miss for Escorts Kubota. Margin pressure, however, is likely behind, but the path to recovery is expected to be gradual. The tractor volume momentum is expected to continue, but despite that, a weak set of numbers that came in from Escorts Kubota, and that is the reason why JP Morgan has maintained an underweight rating on this stock, given a target price of 1,600 per share. And lastly, watch out for Navin Fluorine. We have a note that has come in from Morgan Stanley after the company reported its numbers. The share price is expected to rise in absolute terms over the next 30 days, and that is on the back of good visibility on the volumes. Sustainability is seen in the volumes as well. The management also remains quite sanguine on customer inquiries across key segments, and that is the reason why they've highlighted more investments in order to meet these opportunities. So given that Navin Fluorine is expected to be in focus, Morgan Stanley has maintained an overweight rating given a target price of 5,216 per share.
Well, thanks so much for taking us through all of those brokerage notes, Vamakshi. Always, precious knowledge coming out of that, piece of data that comes through every morning. But, quickly speaking about Atul Suri of Marathon Trends, PMS, well, he seems firm about the target he had set for the Nifty for December. 21,500 was his target. He remains positive on this target despite the recent market correction. Listen in to what he had to say.
When that we spoke to you last, that was before the budget, before the Adani group of stocks rout, your Nifty target was 21500. Any reason for us to believe that you would like to revisit it today?
No, not really. See, and these are not, in fact, these make it much stronger. This makes the conviction stronger because, nothing moves linear in our market. Everything is zigzag, and every philosophy, every thought process, every theory gets tested. And of course, the theory gets tested. When the stocks are down circuit, you ask yourself, oh God, is it going to spread? Is it going to topple the market? But the way the market has performed, the reaction that there is, and the breadth there is, in fact, makes me positive. And, the biggest cause of positivism, which I shared the last time with you also, is the way global markets are performing. It's not just India. The kind of move that you are seeing in global markets is phenomenal. The breadth you're kind of seeing that is happening, the way European markets are performing. So this gives me a sense that this bull market is a global bull market in equities, and India, though in the short run may have underperformed, but I feel that when this kind of plays out, we will still be the best performing market or among the best performing markets. It's just that we have run up very fast. We broke out early. It's like a race. You break out early, you run early. You need to pause. You need to take some rest. In that, you also get tested with this whole Adani saga. And still you find that, you're not tripping. You come back. And I feel that India will pull up in the short term.
Well, that was Atul Suri being bullish on the India story. Now, with that, it's time for us to wrap up the show. You don't go anywhere. There's lots more action coming up on the market. Thank you so much for tuning in.